So after we see the pump in price, we then get the consolidation period with the drop in volume as we're looking for. Now this is going on after the US session, which is perfectly fine. You can just see exactly how it mimics or resembles Bart Simpson's head there. Today we are going to take a look at a very controversial pattern that has been going around the trading world, known as the Bart Simpson pattern. Now before we make any judgments on this pattern, I must just let you know that I have taken some time to take a look at this and see if it is actually a viable trading strategy or setup that we can use. And I do have good news. I do like what I see. The basics behind this pattern before we actually get into it is that what we have is essentially a pump in price followed by a consolidation and then a dump continuation pattern after that. So the reason we call it the Bart pattern is simply because Bart Simpson's hair represents that consolidation period, and the left and the right side, the pump and the dump of the pattern, represents the two sides of his head. So the Bart pattern occurs because large investors or institutional buyers are buying exorbitant amounts of contracts in a short period of time. This is why we see an initial pump in the price, which lasts usually 1 to 3 bars long. The volume at this time is also much greater than the average, and we must look out for that. Once the majority of the buying has been completed, we see a sharp drop in the volume and a consolidation in price, which usually lasts 6 to 12 times the time it took the price to pump. But this is all going to depend on the time frame you are viewing the pattern on. For example, if we are viewing the 1 hour chart and the initial pump takes about 2 candles, then the consolidation would last around 6 to 12 hours long. For the pattern then to confirm as a Bart pattern, we see one big red candle, or maybe two, that also has an increase in volume and closes near the lows of the start of the pattern. Once this red candle closes, we can easily see how it resembles the Bart Simpson's head, as I said. Now I know this may sound like an unorthodox or a playful trading pattern, but the fundamentals of this pattern are sound. I have taken a look at it. We basically have a strong rally in price followed by the consolidation period I spoke about earlier, and this is just telling us that the buy pressure is weakening, then an eventual fall in price as the bears retake control. Just like all the patterns and the setups we use here at OneUp Trader, we are going to find a checklist that we are marking off to see whether this pattern is to confirm or it's a pattern that we want to avoid. So with the Bart pattern, there are 4 main characteristics we need to look out for. And the first is, of course, we need to have an initial pump in price that is going to usually last around 1 to 3 bars long. The second point, we must see an increase in volume as the buying increases. The third one is going to be a consolidation period that will last about 6 to 12 times longer than the initial pump, and this consolidation period will also have a drop in volume. The fourth step is a strong sell-off then that finishes off the pattern. Once we've confirmed those characteristics, we then know that we have a Bart pattern that is tradable. A little bit later on in the video, we will discuss different ways we can trade this pattern. But for now, I just want to show you exactly what a good setup looks like when we're looking for this pattern. In this case, we have the hourly chart open for NQ, and the first characteristic is we have a pump in price. Okay, this lasted, for our example, about 3 bars long, which is good. But the idea here is that we're looking for a pump in price that has a very large increase in volume. If you look at the initial candle first and we go all the way down to see what the volume did, we can see that that hour has a very drastic increase in volume. And yes, it is at the open of the US session, but a lot of the time when I do see this pattern, because the certain periods in the market have heightened volatility, this is where we could see big investors or deep-pocketed funds getting into their positions as the session opens, and then the smaller traders giving us the consolidation period because they don't have as much power to push the market around, and then we see those big investors then dumping their positions. Now that doesn't happen every time, but we can see in this example that's quite a strong case. So after we see the pump in price, we then get the consolidation period with the drop in volume as we're looking for. Now this is going on after the US session, which is perfectly fine. You can just see exactly how it mimics or resembles Bart Simpson's head there. You see, when we have the idea that we're looking for the Bart Simpson head when we trade it, we know that because we have the image of this section here, and if I draw it just here for us. We see we've got the price pump, which is the left side of Bart Simpson's head. Then we've got the top, which is the consolidation, and then the dump. When we're looking for the pattern and visualizing it like this, they're really going to stick out on the chart. So after we've got the consolidation, we then get the dump in price, which is exactly what we're looking for. And at the start of this dump in price, if we go down, we see that the first candle of that dump, just actually the second one, we have that increase in volume. So that would be most likely one of our trading opportunities there. So let's take a look at just one more example. Here I still have the NQ chart open with the hourly time frame. And I'll just move the Bart Simpson out of the way for us so we can visualize it perfectly. First characteristic we look for is the pump in price. The volume has also spiked. In fact, it's higher than any of the days that I have open on this chart right here. We then get the consolidation period, which is great because we have low volume as well. And then we get the dump in price right after that. Before we actually get into how to take trades on the Bart pattern, I want to make one thing very clear for us. And that is that we are all different when it comes to trading. One pattern may work perfectly for one trader, but it may work terribly for the next. We have to at all times be able to adapt our trading strategies and not completely put all our eggs in one basket and rely on one single system to give us the profits that we are desiring. We have to also be able to view the market in an objective way, which means even though I am telling you the Bart Simpson pattern, you need to be able to take it, do your own backtesting, and then figure out objectively how this is going to add value to your system and your trading plan. If you find that it is not going to add value, then don't feel pressured to be looking for the system in any way. Based on my own backtesting of the system, I found it is far more useful to use it as a trend continuation pattern. All the examples I've given you thus far are to take Bart patterns as short trades. It's a trend continuation in a downtrend. Now what I have open for us right here is still the NQ chart, but this time put on a 100 exponential moving average. I'm not going to put the Bart in place, but we can draw it and see how many of these patterns we actually see. So here we've got an example. We go up, we have the consolidation, then we have a small dip. Okay, we have a inverse here, which means this is good because we can take a long trade. It's a trend continuation going upwards. If I see one like this is a pretty good one for a short trade. We got the price rally at this point, then we've got the consolidation, and then we have the dip. In this example, it's a pretty good showing of what a Bart pattern would be. We could say maybe there's a few too many candlesticks at this point. Let me zoom in for us. Could be maybe too many candlesticks at this point. But because we're above the moving average and we're quite clearly in an uptrend, short trades at this point would be very risky because we're basically saying if we take a short trade here that we're selling the top. As day traders or even swing traders, we don't have room to be wrong in the case of such a long-term investor. If a long-term trader would short this, they have a lot more time to wait for the trade to work out in their favor. If I fast forward a little bit, we go down to these examples here. We've got price moving below our moving average at this point. Okay, so we're quite clearly in a downtrend now. As long as the price is trading below the moving average, we don't have to get too technical about it. We can be pretty sure that we're in a downtrend. If the moving average is sitting sideways, we're consolidating. It's very simple to look at. Now in this case, there are many Bart patterns that I can actually see. We've got here, we've got one, we've got another one here. You could say that this is a long-term one here. However, I don't really like the ones that have extremely long consolidation periods. Here we have another one. So you can see as a trend continuation pattern that it's going to be far more useful instead of using it as a reversal pattern. Now the only way that I have come to this conclusion is by doing backtesting, which means that everything that I've told you up till this point, you need to go yourself and backtest and see what it can do for you in your trading. With the characteristics of the Bart pattern, you may be able to actually get halfway through the pattern and you can take a trade before the formation has actually completely confirmed. This is going to give us the candlestick pattern entry. I've got 3 patterns up here that we can look to take trades from. And before we do, I'm just going to clean up the chart because on TradingView these are actually going to move if I zoom in. Now we have the downtrend and let's zoom into our first one. In this example, we're looking for the candlestick pattern specific entry. This is of course going to be completely down to whichever candlestick formation that we see. We may actually not see a candlestick entry, but in this case, I can see one exactly here What we've got here is a bearish engulfer. At this point you could take the trade. This would be a very tight stop loss. If it does work out, you could have a potential very big risk reward ratio. The next option that we could do is we could look at a lower time frame as well. We've got the hourly chart open still here for NQ. If you like, what you could do is grind down to maybe a 5-minute chart and look for a double top, maybe a W formation, something like that to take your trade from. We also have the volume breakout trade. What we do is you can either use a volume moving average, but you don't really need to do it that way. What you can do is you can just mark off the high of the candle that has just formed. So if we imagine that at this point, this candle over here, this one, is the one that's just recently formed, we see then that the next one begins to break through that volume. Without even looking at the price, we can say that a certain point in time above this volume is when I'm going to take my short trade. So that's known as the volume breakout. We can also do something which is called the wide stop trade. The wide stop trade is when we are looking for the Bart pattern to completely confirm. This is for traders that are happy to have a much higher win rate, but in terms of the high win rate, of course, we have to sacrifice something, and that is going to be the high risk reward rate. So in this case, we're going to be most likely looking for a 1-to-1. It may even go negative, but because of the reliability of the pattern, it could still work out in the long run. What that means is, what we look for is we look for the Bart pattern to initiate the pump. We then get the consolidation, and only once we get the close, which is this one here, around the lows of the start of the pump, is when we enter into the market. This is going to give us a risk reward ratio. Most likely, if we take the entry here and we go with our stop loss above the highs, we could go for a 1-to-1, and we would, a lot of the time we would get it. Of course, this is up to your own trading style. The next trade setup that I like the most is called, I give it the name, the catch it all trade. This is when we don't look for any formation and we only mark off about 2 or 3 of the characteristics initially. And let's say we're trading here. I see that the potential for the Bart is actually forming. Initiate a position like this. We'll take the short at this candle. There's no confirmation, and I will take my stop quite wide, and I will put it above the 200 moving average in this case. So I've got it above my moving average, and I would set the target around most likely the lows. Let me remove the volume so we see it. Around the lows, which would be here. Could set the target there. Already that's giving me about a 3-to-1 risk reward ratio. So I'm actually in this case selling into the buying pressure, which can be really good. You see a lot of trading out there that's telling us that we do not want to buy on green candles and we don't want to sell on red candles. So in this case, you're selling on the green candle, you're selling into the buying pressure. But remember, we need to have an objective view when we trade this way. This is just one example of the many trading strategies you can use at OneUp Trader. In fact, there are no restrictions on how you can trade with us. If you have what it takes, then you can be fully funded within 15 days after signing up. We have funded thousands of traders since we launched in 2017. Take a look at the various testimonials, trader interviews, and funded trader withdrawals on our YouTube channel. You can find everything you need on our FAQ section, and you can speak to our support team, which is available 24 hours a day, 7 days a week. Track your trading performance using our advanced accounts analytics feature. Discuss trading ideas with other traders on the members area and the Discord trading room too. Don't risk your own capital in the markets. Rather, prove your trading ability at OneUp Trader and enjoy a risk-free funded trading account. Click the link below or go to oneuptrader.com to find out more.